Well, welcome. Thank you for joining us today. We are preparing for the release of the January USDA WASDE. Wow, can you believe January 2023? Our expert panelists are going to walk you through what we should be expecting today. We have Mike Toohill, who is our technical agronomist. We have Sterling Smith, our director of ag research, waving there for you, great big. Mike, by the way, is going to share with you maybe some weather information, if that is going to pertain to us today. We also have Brooks York, who is our Director of Producer Services. Sterling and Brooks are going to share what we should be expecting from today's release of all these numbers. And really, it is a big report day. And without any further ado, Brooks, let's talk about what those numbers are going to mean for us because, you know, it's big. So why don't you get us started?
There's going to be some numbers on here, Christy, of what we should expect movement in and what we should not expect movement in. So in regards to WASDE, we're probably not going to look for big movement in yield. We're probably not going to look at big movement in acreage. Those things are pretty much past us. If those move, that will be a surprise. We're going to look at a few different things, but primarily we're looking at ending stocks. And I know we've got a big crowd out there today, and the importance of this report is really any type of information, fundamental or technical, over the next 45 days has so much impact over everybody on here. I see farmers on our call. I see AgriSompo North America employees on here and a lot of agents. And price action from here through the end of February is paramount to everybody, and not just us, but everybody around us. So I mentioned earlier, if you're in rural America, and you think about what federal crop insurance provides to your county, a guaranteed amount of revenue to that county, it's big for all businesses, whether you're running the equipment store or the auto parts store. A lot of people don't know that this price action over the next 45 days is a big deal, and anything that can impact it is something that we need to watch. Now, some of you are new to our WASDE meeting, and what I want to do very quickly is let's take a look at a couple of tables that Sterling has put together and just really kind of dissect what the numbers are. Let me take me just a second to get in presentation mode. Sterling, you put these together. This is something that if you're not getting the Daily Market Outlook email, this is something that you have in there on Wednesdays. You've had it in there over the last couple of weeks. Also, if you've got AgriSompo North America conducting a sales meeting for you, if you're an agent, it's something that we go over in the sales meeting as well. And really what I want to do is I don't want to go through what I think is going to happen. I just want to define some terms so that we've got something to look out for here in a few minutes when this report comes out. The first, and it's probably it's paramount, most important, is the ending stocks. Now, of course, we're looking at corn. At the top, you see 22, 23. A lot of folks, I think if you're an agent, you know this. If you're a farmer joining us, we have a little overlap, right? So our crop year, 22, 23, it's the crop planted last year, but it's how we use it from September really through August. So we've got a little overlap. So when we look at this ending stocks number is what we are going to have left over at the end of this marketing year. And it's important to note that number is in billions of bushels. So you can see in November, which is the second column, we were at 1.182 billion bushels was what we were estimated to have left over heading into next year. In December, that increased to 1.257 billion. Of course, we'll know what January is here shortly. So we're looking at that in billions of bushels. When we flip over and we look at soybeans, I'm going to flip a few slides here because, again, this is kind of borrowed from some of Sterling's data. On beans, same crop year, we reduced the ending stocks to 220 million. And if you look in those first two columns, November at 220 and December at 220. Now, while I'm on soybeans, Sterling, when we look down through these numbers, we've kind of said, you know, we're probably not going to change yields too much. We're probably not going to change acres too much. In fact, you can see November and December there were not changes. However, there is probably one or two categories that we need to look at below that ending stocks number that are going to impact ending stocks. what are those numbers, Sterling, that you see most important on corn and soybeans going into the report?
Well, for corn and soybeans both, the big question is going to be exports. And we got another export sales report this morning, and once again, it was not very good. Granted, we have a bit of a holiday hangover here, but export sales have not really been that great. Exports are doing okay for soybeans, not so much for corn and wheat. So one thing for this report, this is where they finalize production numbers. We could still see those export numbers. If they come down, that's going to be adding into next year's balance sheet, which is something we need to be worried about. One thing where we might see a pleasant surprise, soybean crush doesn't go up too much, but we might see a little bit there. We're doing a pretty good job this morning, notwithstanding, for export sales with soybean meal, and exports have been pretty good. So right now, the big thing I think is going to be exports, unless we see some sort of big surprise in harvested acres.
Now, Sterling, when I'm going to switch back to corn, we've seen, you take a look on here, and this is a good time to explain this as well. November and December, if you look at the export number, 2.05 billion. And we don't want to overemphasize this too much, but the important country to watch is who when we're talking about soybean exports?
Well, for soybean exports, obviously the biggest item in the room is China. And what is China going to be doing about buying soybeans? I have some comparatively good news on exports to China. They have, over, let's say, the last 6 weeks for soybeans, there's been a sign of improvement. We were kind of shallowing, and if you look at today's report, there's a chart that shows we're doing better. And one thing that I've told all my buddies on Wall Street is to watch exports of soybeans going into China, not only from the US, but from Brazil, as a sign of China reopening, which could be a bit of a game changer. Where they're a problem, they're not so great for corn. And if we look at total wheat exports, it's a sad, sad picture.
Sterling, let's talk about, I switched this back over to your table on exports, looking at the November numbers and December numbers on corn. And you put together some pretty impressive charts looking at those corn exports, and really it tells a story of China. It's one you sent me yesterday where there was a 5-year look and then an average out there. And I don't want to give an audible on here, but if you've got a few minutes while I talk about this to pull that up, I would really like everybody to see why this corn number in China is so important and why it is so hard to predict. This is when you see this 5-year Chinese buying from the U.S. on corn, it makes this number so hard to predict. And you see November, we went from 2.15 billion in exports. Our estimate in December was 2.075. Sterling, would you say this may be the number that changes corn direction or price direction the most, depending on what we see today?
This is going to be one big number, and this is going to be a number that we're going to need to watch going forward. And if you put up that chart, if you have it, of the 5 years of corn exports to China, for a long time, China was not a very good customer for corn. Then they came out of the woodwork, and over the last 3 to 4 years, China's been buying a lot of corn. Now, today I'm going to put out another export sales report, and once again, we don't see a lot of new crop sales, and we don't see new crop sales to China. So China does not like importing U.S. corn for a host of reasons. They're going to try and import more from Brazil, and we got a Brazilian CONAB report this morning that showed, their corn production is going to be 125 million tons, which was below survey, but that's still 9-10 million tons above what they made last year. So if China comes in and chooses to buy this corn, we're going to either A, suffer some price losses, or B, we're going to need to find new customers for that corn. And our biggest customer for corn is Mexico. And there's been a bit of a trade row about that. That's got pushed off for a while, and I think it's more political maneuvering, but we do need to pay attention, because if that number swells or that number cuts for exports, that's going to, increase the balance sheet, and that's going to create weight on prices.
Christy, if I can have the ball back, I'm going to share my screen one more time, and then really, Sterling, I think segueing into the importance of what China may be reading into the soybean crop in Brazil might be a good place to go next. But let's revisit that that chart that we've got out there in regards to Chinese purchasers from the U.S. Let me see if I can find it here. And unfortunately, let me see if I've got, if I'm able to share that.
If you throw the ball back to me, I can bring it up here instantaneously.
Don't know why. There we go. There we go. Let me close this out. I know this is small and it's tough to see, but I'll break this down. The blue line is our average, okay? If we go back, we've got two lines down here, which are representing 2017-18 and 2019-20. And then all of a sudden, we've got sizable exports to China. And I really think what this does, and this is where we're at now, but I think what this does, it really tells us we
barely a boatload. So, and you can see that in those lines right along the bottom of the chart there. So we don't know where they're going to be. It's, right now the pace is good, but all of a sudden we start to see a lot of South American corn come into the market. Well, all of a sudden that line can start to get flat, and all of a sudden we're not moving the corn. We are about 45 seconds away from the report here. So if Christy wants to throw me the ball, we're going to get picture up here, share.
Sterling, show us where we're at there. That first one looks like corn ending stocks, which is one that we illustrated. That's about fourth one down. So you can see the 1.257 billion from last month, and we're going to fill in the gap.
And this is what the expectation is, about one soybean ending stocks, 220, and there we go. We have a number. We're at 210, so that number is bullish soybeans. 242, that is bullish on corn, so we came in, again, a little bit less than expected, so perhaps we didn't see those exports get cut. Soybean exports did get cut right here. Corn exports also got cut. So if we move on here to production, soybean production got taken down a little bit. And corn production, that came in down noticeably. So we cut production and we cut exports. So we just we made everything smaller.
Pretty interesting. So the surprise there are some production cuts, which hadn't been touched in November and December at all. And then suddenly exports a little lower, which I think a lot of people might have anticipated coming in here. But the net result, which are those ending stocks that we talked about, are lower. Price action right now, Sterling, have you got futures up by any chance?
See, soybeans are up 24, and corn up 3.5 to 4 cents. Not a big jump yet. So there may not have been as much algorithmic trading going on with this report, simply because there are a lot of complicated factors in this, and it takes the market a few minutes to digest these. But coming back here to the actual report, what I am seeing here is, so for example, for cotton ending stocks got bumped up noticeably. Notice soybean yields. We went from 50.3 to 49.5, and that's part of your production cut. And corn yields actually got pushed up a little bit, which was kind of in line with expectations. Wheat ending stocks at 567. It's kind of unusual for them to change ending stocks on wheat, but they did cut those. We also have a quarterly stocks number today. Corn stocks, noticing the expectation were lower. Soybeans also lower. Wheat also a little bit lower. And we have some world numbers on here. World soybean ending stocks noticeably higher. That is going to kind of temper things. Corn ending stocks, though, a little bit lower. So some of those global impacts are kind of leaning on things. Cotton is a little bit higher as well. So this is going to adjust things. And now the question becomes about the exports and where exports are going to become more important. Okay, we took it down. We took it sub 2 billion. Can we add back to that if we see things pick up? That's going to be the variables coming in over the the months between now and when we get the May report, which is the first look at the next one. And the corn exports down, fairly substantial amount. So that's going to be the next bogeys we look at.
The big surprises there, and probably the long-term impacts are those exports. We talk about exports on corn, and it seems like a small number of our overall usage, and it is when you think about domestic feed and ethanol usage, but it's also the number that seems to fluctuate and have the most volatility long term. So that's going to be the lowest corn export number we've printed in a good while. Sterling, how long do we have to go back since we were sub 2 billion in exports?
Oh, let's take a look here. So if we look at total corn exports from the WASDE, make a bigger chart out of this. Well, not that far. We have to go back to March of 2020.
Well,
which was also.
What year do we have to go back where they actually fell below 2 billion? It'd be 2020, 2019, right through there.
2020, 2019, right here.
Yeah. And of course, we know what happened in 2020, and all of a sudden, we had this situation in China where people are inside, can't get out, and really the pork supply in China just skyrocketed, as well as that demand. So situation that if you look at that, it certainly looks like we're starting to get back into something maybe more normal. Not a good sign overall long term.
Well, one number I like to look at here is a 5-year average. So we'll take this back 2018, and there the average was 2.251. So we are noticeably below the 5-year average. So
yeah. So Sterling, not to diminish the importance of the WASDE today. It's probably not that much more. It's the timing of the year. We've got some CONAB numbers that we're expecting here pretty soon. Kind of explain to the group what those CONAB numbers are. And I think that'd be a good time for Mike to kind of talk a little bit about what's going on in South America. Mike, after that, tell us what to expect from CONAB here.
Well, we actually have the CONAB numbers, and the soybean production number came in at 152.71 million tons, which the prior number was 153.48. The street was looking for 152.89. So that number came out a little bit below expectation. And that was mostly a function, looks like we cut acres and yield just a little bit. Corn production came in at 125. Last time around it was 125.8. The street was looking for 127. Now this corn number can have a lot of variability. Most of the corn is part of the second crop, which in the most early harvested areas, it's probably starting to go into the ground right now. So this number can vary. They don't usually change this number too much straight away. Planted area, we're not seeing too many changes there. So the CONAB numbers were what I would call fairly neutral. Brazilian crops historically, we put this number out, they tend to get smaller, unlike U.S. crops, which usually tend to get a little bit bigger. That's just kind of the way the ball bounces. So right now, the number's coming off a little bit, but this number is noticeably, and here we'll pop this up right here. We'll make a chart of this real quick and compare this to last year. And as you can see, last year, we were down here at 128. This would be your trend line yield. And this would be, last year where we had a bit of a problem. So trend, we're above trend right now. We call trend maybe 148. So maybe there's some room for that to shrink. But if conditions stay like they are, it may not shrink too much.
And for anybody that's first time around here, CONAB, these aren't numbers that we normally coincide with WASDE in some cases, but that's kind of translated to be like the supply company telling you about supplies of different commodities in Brazil. It's a public company that I think it reports into like the Brazilian Department of Ministry. So probably the closest thing we've got to a WASDE or USDA report would be a CONAB report coming out of Brazil.
Exactly. Here, I'm trying to see if I can find the South American and Argentinian numbers that the USDA put out. And it looks like they're not on here. I'll put those in the afternoon report, saying what the USDA thinks about the production numbers. Not so much worried about the Brazilian numbers, it's the Argentinian numbers that we're really concerned about.
Mike, on that note, you've done a lot of work on weather down in South America over the last couple weeks, well, last couple of months, really. I thought the information you supplied in yesterday's segment of the training meeting was really, really good. Could you pull up a few slides, just kind of illustrate to folks what we're seeing down there, and really kind of talk about, how much more time do we have in Argentina? We're a little further south down there than Brazil, so it means a little further north than the U.S. if you're comparing. How much more time do we have there to even salvage much out of that area in Argentina?
Hang on here, Brooks. I'll grab a few slides for you here real quickly. Find PowerPoint if I can find one here. Let's go out of
In the meantime, I've pulled up the Argentinian soybean production number. The USDA put it at 45.50, which is down considerably from the last report.
here we go. Let me get this to work, Brooks, Sterling. There we go. Are you seeing my slides, guys?
We're not, but you know what? I've got them here, Mike, and if everybody will be patient, I'll just go ahead and I'll go ahead and flip some up here. Let me take a look at something, and I will share. I've got them right in front of me.
Maybe we'll just look at that weather map, Brooks, maybe slide 3 or 4, the forecast.
Okay. Mike did a good job of kind of illustrating where the critical soybean production areas are down in South America. Mike, you want to start here, or that one's probably a good place to start?
Yeah, let's just do that map real quick. Kind of looking at the 30-day South American percent of normal map, like Sterling has been talking about, most of Brazil's in pretty good shape. Actually been getting a little bit too much rain in a few areas and some of the maturing beans, but most of the problems for Brazil have been that southern 10 to 15% where it borders Uruguay, Paraguay, and Argentina. So basically, most of that Brazilian crop is pretty well like our mid-July, getting close to the finish line. It looks like it's going to be a record crop for Brazil. Probably not a record yield per acre or hectare, but a record based on acres and yield. Most of the problems continue to be down here in Argentina. One thing we have to realize with the Argentine crop, it's generally planted later than the Brazil crop, so it's more like mid-June there. So they do have some time for some rain to kind of heal up that crop, although some of the early planted corn is beyond the point of return in Argentina. But like we talked about, the corn crop Brazil, most of that's going in the ground, and most of the Argentine crop was planted a little bit later. So the Argentine crop has some time, and it's going to be a long time until we know the story on the Brazilian corn. If you want to run to the next slide with the weather maps, Brooks. There we go. I'm kind of looking at this map right here. This is our 1 and 2 week forecast maps for both Brazil, Argentina, Uruguay, Paraguay, basically South America. And as you can see, it looks like we've got one more week here with just scattered range for Argentina. But kind of looking at this 2 week map, we've got some pretty good rains for southern Brazil, most of the Argentine production area. So again, wheat too looks like we may get some nice range for Argentina, which is good for those farmers, probably a little negative for our soybean prices. So right now, as we talked during our last recording of the Edge team, it looks like the Brazilian bean crop pretty well made, probably going to be a record setter, just some scattered problems here and there. The question continues to be the Argentine crop, but it does have more time. And if we do get the weather situation to break down and start getting more rains in Argentina, maybe that crop can surprise to the upside. So that's kind of a nutshell in South America where we stand here today.
Thanks, Mike. Sterling, what kind of price action are you seeing right now? You care to pull up a screen specifically on beans?
Krista throws me the ball here, and beans are doing a little bit better here. Share this. And here we still see beans up 23 cents on old crop, and on new crop, let's punch those up here real quick. New crop beans up 10.5, doing a little bit better. So we are seeing some decent buying coming in for the soybean market. The corn, again, they're pressing up against the high of the day, 669. So we're pressing up against the highs. So we're seeing some decent buying. When you look at wheat, well, wheat just can't win. March wheat, well, we're off the lows, but again, not printing any green ink. There wasn't a lot of big news for the wheat market here right at the moment.
Sterling, back to that November bean chart. We illustrated this last week, and it's one of those things. Every once in a while, you go into a meeting and you don't really have anything that you want to show specifically, but something shows itself. And that November bean price, you made a comment earlier. I guess it was last week, and through the last 2 weeks, where does this bean price rank historically as far as this trading day throughout history? In other words, beans at $13.98 for November futures. Where does that put us for the insurance industry versus any day in history? I think this is pretty interesting information for everybody to know.
Okay, so this is a chart of November bean futures going back the last 5 years, and the blue line I have highlighted here is our current price. This is the highest price for this time of year that we've seen in the last 5 years for soybeans, and I can take this back 29 years. We'll take it back 29 years, and we're going to have a whole lot of squishy lines on here, as you can see, but going back 29 years, this is the best price. You can see that. Now, this was the price last year, so we're above last year's price, and we saw we did take off. We had issues last year. We had South American issues. We had a noticeably smaller crop in Brazil. This year probably isn't going to be packing that fuel. So as you can see, for soybean prices for new crop, we are the best that they have been ever for this time of year, and not the best ever, but obviously for this time of year, very, very good prices.
Last year, if I'm not mistaken, the Brazilian crop surprised us towards the end of the growing season. In other words, we really adjusted that production down, but it was a little bit later in the year. This year, we've got, like Mike said, a solid supply number, not a record yield down there, but a solid supply because of the amount of acreage planted. And we've got some rain in the forecast. And that may have been a little bit different than where we were at last year. So something to take note of. If you've got anybody out there that, is interested in marketing new crop soybeans, if they sell today, like Sterling said, it's going to be the highest November futures price that they've been able to sell over the last 29 years. So not a bad place to take a bite of this and reward this market today.
And we're going to talk about corn prices here real quick. And looky here, same story for December corn futures. Not quite as dramatic as the soybeans, but still, you are at the best level, just besting. This red line is here. who knows what year that was, but we are at the best levels.
Too
for
many lines.
December.
Too many lines.
Well, here we can also look at this as an average and a high low here, and this will give you probably a bit clearer picture. That orange line is where we are right now, and this is the seasonal high and lows for all the December corn futures going back the last 29 years. And as you can see, we're not only way above the average of 362, but we are above the record at the top level.
Real quick, before we hop off here, since Elliot Conshock is not on this call, I'm gonna steal some of his thunder, Christy. And he's got a brochure that he's put together on band that's amazing, and I'm going to steal some of his material. Can I have the ball back? I want everybody to kind of take a look at this, because, you know, while Sterling and I say November and December are at really good levels compared to today, it's interesting to see where they can go from here. So if you sold last year at this time, you know, you had a lot of more upside opportunity along the way. And here's something, Sterling, I'm going to put you on the hot seat here, and I'm going to share this real quick. I'm going to call you out. Let's go back in time 10 years, Sterling. 10 years, we say volatility occurs June, July, and August. That's when you're going to see your highest volatility in corn and beans. We're also going to say, and everybody on the call knows this, especially in the crop insurance business, 7.3 years out of 10, the projected price looks better than the harvest price. Now, all of a sudden, we find ourselves in a little different situation. And what Elliot put together on here, and he's really going to shoot. And if you go back, you can see exactly where we're at. Now, I like this for two reasons. I'm going to give you some more time to calculate, Sterling. The question is, are we in a time period where 7 out of 10 years the harvest price is going to be higher than the projected, or are we going to go back to normal? But before we do that, 2 points. One, I want you to look at this, and I know that this is small. I'm going to increase this on the screen. Everybody take a look at this. I want you to look at just how good $6 December corn futures look on this chart. Take a look at this. 2010, we got our highest monthly average in October, 546. 2011 and 12, they came in August, and we all remember 12 too well. So these 2 years, yep, they were pretty good, but we had a lot of pain to get there. All of a sudden, 627, 503, 427, 419, 396, 419, 450, $4. Everybody remember that corn export chart that Sterling showed? Corn down below 2 billion bushels of exports, 571, 734. So, number one, 6 looks like a pretty good number to me. Number two, look at this range, Sterling. These things are not concentrated in May, June, July like I would have predicted 2000 through 2010 look like. Are we going to go back? Are we going to see history repeat itself where that projected price is the price you want? Or are we in a new era here? No pressure.
Well, the projected price and prices where we are right now are going to be very favorable. This year, we have a multitude of factors. Number one, we have to think about what the dollar is going to do and where that's going to be. There's some inclination that the dollar is going to go lower, and that can potentially improve the export situation. If that does not happen, the next thing we have to think about is China going online. If they come back online, that will improve the export situation. No guarantees there. The third thing is we have to think about fertilizer costs and how many corners are going to get cut this year versus last year. My guess is there are going to be corners cut, but they're not going to be as many. So that being said, we may very well find our prices now to be favorable from where they are going to be in December. I would say that right now, that is the way the risks are tilted. If we see an improvement in weather, that will, obviously move those odds much higher to seeing lower end of the year. If we see continued weather issues, it may not be as bad as that, but we will still be looking at prices probably being lower and potentially materially lower by the time we get to harvest.
You know, the ASNA Edge crew, we're going to be up in Iowa next week, and one of the things in the presentation that I think we need to point out is this does look like a market that has adapted to a lot of arrows that it's had fired at it. And if you really think about this, you know, we've had, if you throw COVID in during the whole process, and it's you know, it's ebb and flow and effects on exports, but you really look back, Mike, 2 years in a row, we've had subpar performances with the crop out of Brazil. You throw Ukraine into this thing. Wow. We've got some Ukraine estimates that I kind of trust for the first time in maybe 12 months that we're going to show next week. But, you know, we had so many questions as to how much, if any, of the crop could get on the world market. And there was an effect. But the supply chain has adapted is the main thing. And I'm with Sterling on this. I think that I've seen this before. 3 years ago, it looked like an impossibility. I'd say a year ago, it looked like an impossibility for us to supply the world's protein needs. And of course, I've seen this back in 11 and 12, you know, 6 years into the ethanol mandate, a drought that affected a big part of the country where our yields were in the 120s overall in the U.S. And how in the world, 2 years later in 2014, Sterling, you've got 2 billion bushels of corn left over. So I think we got to be real cautious here that it certainly looks like maybe production in South America not you know, better than it's been in the U.S. Sterling, we haven't had great crops in the U.S. For a little while here. How many bushels were we off of trend line last year? 5 bushels in that report today?
5, 7 off that, and these trend line ideas keep going up. But in reality, we haven't really improved yields too much, really, certainly not in the last 3 years. So we're probably due to see weather improve. Most likely it will. That's going to depend a lot on La Nina. If the La Nina does in fact fade, that will promote better production both in South America and particularly in North America. While the drought is improving in California in some places, it still doesn't rain in Nebraska. Okay? It just doesn't rain here anymore. And I've got the water bills to prove it.
If there's anybody from Nebraska on this call, just ask Sterling what year he moved there and when the rain stopped is all I'm going to say.
Pretty much, yeah, pretty much.
Pretty much, yeah. When I showed up here in 2020, the rain had completely fallen apart in a big way. We didn't see much snow last year. Last August, I had to dig out most of my front yard and replant grass, and I was watching the rain closely to try and control how much water I was putting on it. I had water every day, and guess what? We had a little bit of snow coverage, and that's it. That drought doesn't break, we're still going to have a production problem because you can't knock out most of eastern Nebraska and part of western Iowa and have a record yield. It's just not going to happen. So if that changes, that's going to be something that's going to be a problem for price. Now, Christy, if you throw me the ball back here real quick, I want to put up a chart of December corn futures here.
Yep. Hey, as I am, we did have a question here. It says lower, like 450 lower, $1. She just asked that a little bit ago.
Okay.
When we were talking about that.
So here is a chart of December corn futures. And as you can see, we're doing quite nicely today. But notice how this chart, we make lows and the highs keep failing. And we're probably going to have 2 or 3 good days off of this report. Maybe, it might just be one day, we'll see. But we're below some moving averages. We can start grinding lower here. And as we go further out into time, we're going to see that, you know, if this trend continues, all of a sudden we're maybe looking, you know, somewhere in this 550 range as a potential, you know, coming into if planting goes okay and the Brazilian crop July, when funds often come in and liquidate, you know, we could find ourselves in a spot where we could find some precarious pressure, particularly if we don't see any improvement in the fundamentals and in the export numbers.
That's, you know, at the beginning of the call, and I know we need to wrap up here in just a couple minutes, Christy. We talked about how, you know, our planting season overlaps with our crop year. And, you know, we may get into a situation where these numbers are, I wouldn't say etched in stone, but pretty stable. That 1.2 billion carryout number is where it's going to be. All of a sudden, you know, Mike, we start looking at what is in the field in the U.S. in June, July. And then all of a sudden we start to estimate, how does this play in the following year? Does it take that carry out to 2 billion bushels on corn? Does it take it to 1.6 billion? So, you know, overall, I think kind of what we're saying is that 1.2 billion, you know, I don't think any of us are bold enough to put a mark on price, but that 1.2 billion, the likelihood of it going up over the next 12 to 18 months to affect the 23-24 crop is relatively high. Just something for everybody on the radar. Well, Christy, we've had an awesome meeting. I would how we keep it informal. I've had some questions come across, and I'll get back to you individually. But a great audience, lots of states represented today. We've got farmers, we've got agents, we've got AgriSompo North America employees. And hey, I think we ought to be happy with the results. It looks like, hey, from a revenue standpoint, things look a little bit better after the report today. So, Christy, I'll let you wrap us up. Appreciate everybody being with us.
Yeah, there was just so much great information today. Thank you guys for sharing all your expertise with us and answering all the questions. I know even before we started the recording, Sterling always answers my questions. So I so appreciate it. And what a great way to start the year with all this data. I mean, this is what we need to prepare those risk management plans. So, you know, get out there and get those started. That's what this information is for. So be sure to join us though next week as we have our monthly meeting. I put that link in the chat box, and that will also be available on our social media platforms and in our DMO. So make sure that you check that out. You get registered for that. If you are not getting our DMO, why not? I mean, that's silly. Obviously, we have great information in that. Sterling just talked about all the information he's sharing in that. That information is available to you at no charge. It's ridiculous not to be receiving that. So make sure you sign up. I would sign up today. Send me an email to marketinginfo@sompointernational.com and we'll get you signed up so that you can start getting that right away. And we will we'll get you in there. You'll be getting that and you'll be on the road to all sorts of more great information. So thanks again for joining us. Have a wonderful day, and we will see you next Thursday.